I think we're live now.
Okay.
All right. Good evening, everyone. How you all doing? Let me just share this on. All right. So who is here with us? If you joined the class, just just let me know in the comment section. If you are joining us, just type hello something else in the comment section. Let's know that you are here. And or you can just tell us where you are joining this class from. You can just type the city you are joining from. Let's just give a couple of seconds for more people to join us. All right, Felix Doku, you're welcome. Good to have you here. Once you join us, just drop a comment so that we know you are here. You can tell me the city you are joining from. And we're not going to waste any time. We'll just go straight to the point. Mesoma Ugochukwu, you're welcome. Good to have you here. It's going to be a great time. Felix Doku from Ghana, good to have you. How is Ghana today? Peter from Lagos, you are welcome. So I'm so excited. We already have Nathaniel in the studio already. That means no wasting of time. We just go straight to the point. I'll be here learning as well. Make sure you have a notepad and a pen that you can, jot things down so that you're able to implement what you learn from this class. Um, so hi Nathaniel, hope you are ready for us.
Yes, I am. I am. Good
Awesome.
evening, everyone.
Good evening. You're welcome. So you can just take it from here, and I'll be here with you as well, just in case um, you need
Okay.
anything. Yeah, but we can just start right away.
Okay. Hello, everyone. How are you doing? How are you doing? Thank you for joining to this live session. I'm so much excited from wow, Joshua joining from the UK. Thank you, Joshua. Thank you, everyone. So I'm going to introduce myself for those who don't know me, and we kickstart fully. Felix from Ghana. Thank you very much. So my name is Nathaniel Disu, and I'm a financial markets analyst. I work with Nairametrics. So Nairametrics is a leading financial resource company where we publish about business news, finance, the economy, investments, and everything about your money. Then I also run a personal training called How to Retire Young and Rich, where I teach individuals how to invest in the US stock market and also about their personal finance. I'm most active on Facebook. That's where I write. I give out most of my content. I'm active on all social medias, but I'm on all social media, but I'm mostly like if you want to really get me and learn from me is from Facebook, Nathaniel Diso on Facebook. And I'm excited to have this session with Emmanuel. So we're going to be talking about the stock market, everything about the stock market, what it is, how do you profit from it, how to get started, and everything in between. So I have an outline here already. So you can hope you have a pen and a paper to jot some things down. So I have my outline here and we'll just run through it from there. So let's start with what is stock. So I'm sure some person might have heard of it one way or the other. Stocks, stock market, what's it all about? Is it just everything? What's it all about? So stock is more of equity. So when you hear the word stock, shares, and equity, they mean the same thing. So at times you might hear people talk about the equity market. We might hear people talk about the stock market, you might hear people talk about buying shares of company. They all mean the same thing and it's the same concept. So this I'm going to explain what stock means. Let's say you have a okay, let's say you have a cake. You go for a birthday ceremony or maybe wedding, and there's a cake to celebrate, and maybe there are like 50 persons in that ceremony, or maybe 100. You would agree with me that all the 100, it will be difficult for them to just get one cake and go. If I take the whole cake, Emmanuel will not have anything to take, the couple or the celebrant will not have anything to take. So what do they do at birthday ceremonies is that they cut the cake into smaller pieces and they share it round. So with that, everybody have a piece of the cake. Everybody have a taste of the cake. So that's the entire concept behind stock, behind shares. It would be, let's say, difficult for you to buy an entire company or to own an entire company. But when you have access to the shares of that company or the stock of that company, you are taking a piece of that entire company. I don't know if you get it, you are taking a piece of that entire company. So using the concept of cake, how cake, I'm sure almost everybody you've gone to birthday ceremony at one point or the other, whether when you were small or now that you are older, you've gone for birthday ceremonies and they would cut the cake into smaller pieces so that it can go round. So that is the concept about it. Having shares unit of the stock of a company so that you can buy into it and you own a piece of that company. So the value of the stock that you have depends on how many units you have. So let's say with the cake example, if I let's say we are to buy those little pieces of cake and I buy five pieces of cake, and Emmanuel just buys two, or Peter just have one, I have more than him. So that's the entire concept of stock or shares. The higher you have, the more control you have over a company. So that's why in the stock, in shares of companies, you hear something like majority shareholder, minority shareholder. Majority shareholder, that the one that have the most stocks or the most units of shares in the company, while minority, they have the less units, but everybody still has a feeling of that company. So whether you are a majority or you are minority, if the company blossoms, we all participate in it, we all benefit from it. So that's the entire concept of stock. Now I'm going to go to the next point I have on the agenda. How do stocks make money? How do you make money from the stock market? How do you profit from it? Now I'm also going to talk about why. Okay, I'm going to talk about difference. This way, there's a difference between privately held companies and publicly held companies. So I'm going to talk about that. So most times, especially if you're in Nigeria, you see some companies and you see maybe Emmanuel Adanu Ltd, that is limited, Emmanuel Adanu Limited, Dangote Cement PLC. So I don't go into the technical part, but I just want to understand the difference between privately held companies and publicly held companies. So for a privately held companies, there's a limit to how many people, to the number of shareholders it can have by law. That's why it is privately held. I think, if I'm not mistaken, for Nigeria, I think you can't have more than 50 shareholders in a privately held companies. If I'm not mistaken, I don't really do much of business law, but I think I read it. So you can't have more than 50 shareholders for a privately held companies. So if, for example, let's say Flutterwave now, most persons, especially if you're online, you've heard of Flutterwave. Flutterwave is a privately held company. So you can't have, if everybody wants to buy Flutterwave, it will be impossible because it is privately held and there's a maximum limit to the number of shareholders it can have. But if Flutterwave decides to go public on the stock exchange, they are uncountable. You can have 1 million shareholders, you can have 200,000 shareholders, it's endless. And that's why it's public, it's open to the public, everybody can buy. Now, let me also talk about the concept behind stock market. So let's say you go to like a regular market, you want to go and buy food stuff. There are buyers and there are sellers. You want to go and buy maybe a new, for those who live in Lagos, you want to go and buy a new laptop. Where will you go to? You go to Computer Village. You get maybe a new gadget or a new laptop. You want to buy maybe new clothes, you go to Mandela's. or Eko, you go there, you get new clothes. If you want to get food stuff, you go to a market called My 12 in Lagos to get food stuff. So all these, they are markets whereby, and when you go to this market, there's always a buyer, there's always a seller. There are different goods, that there are also different products. So also in the stock market, it's a market whereby you trade shares of companies. You trade shares of companies. There's a buyer, there's a seller, and everything. But technology has made it advanced that instead of you just having, the how a regular market is now, it's just round, everybody's all blue, this is jagged. So everything has already gone digital, and technology has made it easy that just with an app on the internet, you can have access to these shares and everything. So that's the concept behind stock market, how it is. So I'm using this little example so you'd really understand, so it doesn't sound like magic. So with that cake example, you understand, okay, units of shares so that it can go around and everything. So how do stocks make money? How do you make money from the stock market? So there are two ways. There are two basic ways. There's something called capital appreciation, and there's something called dividend yields. So most persons will have heard about dividends, but I'm going to explain it too. Now, capital appreciation, with the word capital and appreciation. Appreciation is more like increase in the value of the shares that you have in that company. Increase in the value of shares that you have in that company. So um let's say you buy a land, for example. You buy a land of 500,000 naira, or say, okay, still this is an international audience, so let's say universal currency. Let's say you buy a land of $1,000, for example. You buy a land of $1,000, and after some time, the land is now worth maybe $1,500 or $2,000. The capital, the value of the land that you have has already increased. Now, if you decide to sell that land at $1,500 or at $2,000, you've made some profit, because you decide to sell it. It already appreciated in value, and you decide to sell it. You've made some profits. But let's say you buy an apartment. You buy an apartment. Now, instead of you selling the apartment, you buy an apartment, or maybe you buy a land and you build an apartment. But instead of you selling it, you said, okay, let me lease it out for rent. So if already bought it, the apartment has a value already, and you decide to take it out for rent. So people pay you maybe $100 per year, or maybe $200 per year. So despite the value of the company, you are still getting little returns on the investment that you've made. So dividends is when a company pays shareholders from part of the profits they've made, because every company is existing for profits, to make money. Whether you want to do impact, you want to meet need, you want to solve a problem. If all the solving of problem and doing everything, if it is not translated to profit for you, you are just doing charity. If it's not translated to profit for you, it is just charity. So charity is when you are doing something and you are not expecting monetary value in return. You are not trying to make money, but every company wants to make money. Every business wants to make money. So when a company has made money, and like it's a good year, they made so much profit and everything, they give out part of the profit to shareholders. It's like a way of rewarding them for investing in the company. So those are the only two ways you make money. Either you make money by increasing the value of the shares that you have, or by getting dividends. Now, getting dividends doesn't mean your capital cannot still increase in value. So the capital can still increase in value and you still get dividends. So let's use the apartments, for example. You bought an apartment in Lagos, and maybe you spent $10,000 to build the apartment, to furnish it and everything, and you put it out for rent. So let's say in a year, you are getting $500 as rental income and everything. Despite the money coming in as rental income, the property itself still has a value. So even if you've collected rent for 10 years, 20 years, you can still decide to sell the apartment despite the rent that you've had. And in some cases, the apartment can even increase in value. So let's say, for example, there's a place called Banana Island in Nigeria, for those who are conversant with it. So let's say I bought a land in Banana Island in 2000. for example, and I build a very beautiful building and I lease it out for rent. And since 2000 till now, I've been collecting rent every year. Obviously, the value of the house as at 2000 compared to now, there's a difference. So it has increased in value over time. So despite it increasing in value, I'm still getting income for my rent. So the stocks that you have in a company, you can be getting dividends and still have the capital can still increase, the share price can still increase. Now, it's not all companies that pay out dividends. It's not all companies. It's not all companies that pay out dividends. So there's a book I wrote, The Stock Market Millionaire, kind of talk in full details the why companies don't pay out dividends, because the entire concept of paying out dividends is a way of rewarding your shareholders. It's a way of rewarding your shareholders. And we're talking about the US stock market, so don't even let me talk about Nigeria. So for the US stock market, most times tech companies are not dividend paying companies, at least for now. Most tech companies are not dividend paying companies. For example, Tesla is not a dividend paying company. Why? Because they are still growing. They are still growing. So any money that they ought to have maybe paid out to shareholders, they invest it back into the business for it to grow and grow and grow. And that's why most times we hear that somebody Tesla stocks are kind of going high, because instead of the shareholders are not getting reward from dividends. So the other way they can get reward is by increasing the value of the stock that they have. So let's say you bought Tesla when it was $50 per share, for example, and if LD they are not paying out dividends, but now I'm just using this as an example. I'm not saying that's how it entirely works, but let's say, for example, you bought Tesla at $50 maybe 5 years ago, and there's no dividend because it's not a dividend paying company. And now you've kept the shares, and Tesla is now worth maybe $200. Despite not paying, despite not getting dividend, if you decide to sell your shares in Tesla as at now, you've made a whole lot of money, because you bought it when it was 50, now it is worth 200. So you've made like $150 profit on each unit of stock that you have. I don't know if anyone is getting me. If I get me, you can type inside the comment section. So those are the two ways you make money from the stock market, either through capital appreciation or through dividend yields. Those are the two ways. Now, what are the basics of stock market investment? What are the basics? So one of the things you need to know is that's what I kind of talked at the beginning. What shares are, what are dividends, capital appreciation, and one other thing that you need to know about the basics is that so there are some platforms you would use to get access to be able to buy those shares, which I would come about in the next segment. I'm going to talk about it in the next segment, choosing the right platform to use and also getting started. Now let me talk about why invest in stock market, in the US stock market, because maybe curious that, okay, why should I invest in stock market, especially for this year and age. There are so many other investment options. There's forex and there's crypto. Most persons are crypto is kind of popular now for the youth, and some persons see maybe stock market as this one is for old generation people or something. Crypto is the main thing now. Let's go. Stock market is not old generation. As a matter of fact, crypto thrives on stock market, in the sense that anything that happens to the stock market it would most likely have a ripple effect in crypto. Most times. If you look at those who are really good with crypto, they kind of they still depend on some things happening in the stock market.
Yeah,
now, it doesn't mean every single thing that happens in the stock market will happen in crypto, but most times you kind of see there's a correlation. If anything happens to Apple today and maybe Apple goes down, it will have a ripple effect. Because most of these big companies that back any crypto project, they also have investment in shares. They also are like there are institutional investors that have investment in these big companies and everything. So one of the reasons why you should invest in the US stock market is that it's the largest wealth creation vehicle ever. Like, it's the largest wealth creation vehicle, I know, yes, people talk about real estate and so many, but one of the things you should know about the US stock market is that one, you are investing in the largest financial market in the world. There's one. The US stock, the US stock market or the US financial market is the largest in the world. Everybody look at what's happening on Wall Street. Everybody look at what's happening in the US market. Anything that happens in the US market, it affects everybody else. When the US market crashed in 2008, the financial crisis, it affected everybody. Yes. So it's the biggest, it's the largest. So definitely it would command much attention. And also it has been existing for centuries, since 18 something. I can't remember that 1870 something. It has been existing since centuries. So it's not something that maybe just started yesterday or something. It's something that has been existing since even before our great grandfather. It has been existing for long and to continue to exist. Now, what is the concept behind stock market and why does it exist? Is that you are investing in businesses. You are investing in businesses, and business makes the economy to run. Business makes the economy to run. If anything happens to Apple, Facebook, Microsoft, and Amazon today, if they should shut down, the entire world will shut down. Because do you know how many things are reliant on these companies? We all see what happens when Facebook shuts down, or maybe there's no network on a WhatsApp. Everybody runs. Imagine if Facebook shut down. Imagine if Apple shut down. Imagine if Google shut down. YouTube will be down. Imagine
Yeah.
will not be able to make money from YouTube again. Everything will
That
be down. There will be no Gmail. If Amazon shut down like this, there will be nothing. So these companies are really, really huge, and they kind of have a ripple effect on the entire economy. They have a ripple effect on the economy. One of the things that even led to the financial crisis in 2008 was because of companies. It was because of companies. Some of the investment banks, mortgage, and it's companies. So it's not like US government did something. It's companies. It's companies that had fraud and everything. It affected the entire economy. Economy shut down. So you can say it's really, 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 really important. You can't detach the US stock market from the economy. As a matter of fact, in some cases, if you want to have a sense of what is happening in the economy, you look at the stock market. Now, it doesn't happen every time, but most times, if you want to have a sense of how healthy is the economy of this nation, look at the stock market. Why? Because the stock market is where shares of companies are traded, and those companies are in business. They buy and sell. They offer services that the entire economy uses. So that's why you get in talks of GDP and everything. Because people they produce things, they manufacture. Imagine if anything happens to Dangote today. Let's say Dangote shuts down today in Nigeria economy will be affected, because people rely on Dangote one way or the other. They rely on his products. They rely on the cement, on the sugar. They rely on so many things. Imagine if MTN should shut down in Nigeria today. Many people will be in crisis. You cannot call anybody. You cannot do anything. So the stock market is really, really important, and that's why you should invest in it. And another thing to why you should invest in US stock market is that the rich invest in it. The
yeah.
billionaires will invest in it. Now they will not necessarily invest like the way retailers invest in it, but they invest in it. For those who are conversant with business news in Nigeria of late, you would hear that Femi Otedola is now a director in First Bank. He bought shares. He's kind of like the one with majority shareholders in the First Bank. He has shares. He's investing in stock market, in stock of Nigerian stock. There was a time that he bought shares of Transcorp. Forgive me if you're an international audience and you don't really know about the brand. That's using that to explain. Bill Gates, he has shares in Apple, in Coca-Cola, in so many companies. So yes, there's a place of real estate, which I understand everybody, yes. Even in my trainings, I always tell people that if you want to be friends with a billionaire, there are three things you need to know. If you can, or you need to have knowledge about. If you have knowledge about these three things, these are the three things that billionaires are interested in. if you want to be their friend or if you want to have good relationship with them, understand these three things. One, stocks, shares of companies. Two, real estate. And three, taxes. Stocks, real estate, and taxes. Every billionaire wants to know how to pay less tax. If you can tell Dangote today that Dangote, I know this, I have this information that would help you to pay billions of naira less in taxes, he will listen to you because every billionaire wants that. If we tell them, okay, they are interested in real estate, stock, and also taxes. Everybody do they are looking for ways to cut down on tax, are looking for ways to bypass it legally. So stock market is really important. The rich are interested in it, and also majority of Americans are also they have shares in they invest in the US stock market one way or the other. People buy shares of companies. So that's why you should invest in it, because the rich also invest in it. So if the rich can be putting their money in it, why can't you? Now let's go to the next section. I don't know if you guys are learning something so far. No, you are learning something. Now, investing in the US stock market
If you are
from
learning something
Nigeria.
here, please
So
type one in the comment
investing
section if you are learning.
investing in US stocks from Nigeria. Now let's talk about choosing the right platform. What platform can you use to buy shares of companies? So my favorite platform, yeah, this is not a paid ad for them, but this is what I started with, and I'm kind of used to them, and that's what I recommend to people is Bamboo. So there are three different platforms you can use, but I majorly um endorse one because that's what I use and I'm familiar with. So there's Bamboo, Chaka, and Trove. So I'm going to spell it out. Bamboo, 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 Bamboo. Then there's Chaka, 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 and there's Trove, 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 Trove. So Bamboo, Chaka, and Trove. So these are the three platforms you can use from Nigeria. And for now, I think I saw someone that is based in Ghana that is joining this live session. So Bamboo is also in Ghana. So you can also, even as a Ghanaian, you can still get access to the US stock market. Bamboo is active in Ghana. So for I think someone will also join in UK. For those who are in UK, there are other platforms that you can use from the United Kingdom. So you don't need to use. So this one is for Nigerians alone. But if you are outside the country, if you are maybe based in UK, there are different platforms you can use. There's trading 212. There are so many other platforms, so you can just Google that out. But let's just narrow it down to this in Nigeria. So these are the three platforms you can use to invest in US stock markets from Nigeria. So they're easy to use, easy to understand. You can just download them from from your Play Store, either Apple Store or Google Play Store. So you just download the platforms, you register, sign up, and everything, you get started. So getting started, let's talk about what's the minimum to get started with. How much should you invest? How much can you get started? What's the minimum? So on Bamboo, the minimum is $20 to get started with. $20. Although personally, I always advise people, this is my own personal opinion and personal advice, that if you want to get started and get the best value from it, invest with nothing less than $50 to $100. Nothing less than $50 to $100. That's my own personal advice. Why? Because it gives you options. It gives you options. It's difficult for you to. So now let me give you explain why it gives you options. So let me use Emmanuel as my case study. Let's say I buy 5,000 naira worth of shares. For example, I buy 5,000 naira worth of shares in Apple, and Emmanuel buys 500,000 naira worth of shares in Apple. So we bought the same stock at the same time, but Emmanuel invested 500,000 naira, I invested 5,000 naira. So if we bought Apple and Apple maybe over the years it increases by 100%. So let's say we bought Apple when Apple was trading at $20 and it's now trading at $40. That is already 100% appreciation. That's getting the value by 100%. Now we bought it at the same time. Now let's say we want to sell our stock. My 100% from 5,000 naira, I now have 10,000 naira because it has gained 100%. Emmanuel's 500,000 naira is now worth 1 million naira. We got the same return, 100%, 100%. But at the end of the day, my profit is just 5,000 naira. Despite all my hard work, it's just 500, it's just 5,000 naira. While Emmanuel's profit is 500,000 naira. Now, if I'm to ask, what is the difference between the two? Because we bought the same stock, we bought it at the same time, we got the same 100% returns, we are selling at the same time. Why is my profit 5,000 naira and Emmanuel is 500,000 naira? Can someone answer in the comment section? Let me see if you are following. I used 5,000 naira to buy Apple. Emmanuel used 500,000 naira to buy Apple. We got the same appreciation, 100%. But my profits, I have just 5,000 naira. He has 500,000 naira. What's the difference? Let me see who is following. Can you comment? Why is Emmanuel's money higher than mine? Can someone answer? Why is Emmanuel's money higher than mine? Okay, someone said the capital. Why? Who else? I want to be sure that we are in this class. Amount of investments. Okay, who else? He invested more. Emmanuel invested more. Good. I'm glad you guys are following. So Emmanuel invested more. So why? Because money gives you options. When you have money, you have options. Money gives you options. And there's something we learned in secondary school, ICT or computer. I don't know if you are familiar with it. Garbage in, garbage out. What to put in determine what to get out. So it's not magic. It's not kalo. It's not MMM that you put 10 that you put 10,000 and you expect that tomorrow you get 1 million naira. The amount of profits you have, the amount of return that you have is a reflection of how much you put in. It's a kind of reflection of how much you put in. It's a reflection of how much you put in. If someone invested 1 million naira and he has more chance because there's volume of units, so he has more chance in their profits. That's why at times you see billionaires, they would invest maybe $10 million in an asset class, and they just maybe they get 5% or just 8%, and you see that they've made $800,000 from 10 million naira. It's because they have higher money, so it gives them option. Imagine if I put just $1,000, the amount I would get in return is just little. So despite, it's good to start small. It's good to start small. It's good to start with what you have. But the idea is that the higher money you have, the higher your return. The higher money you have, the higher the profit you get in an investment. It's as simple as that. The higher money that you have, the higher the return. It gives you option. It makes it easier for you. So getting started, you can start with what you have. So you can start a minimum of $20, but in my own. So if you cannot do $100, fine. That's one of the beauty of the stock market is in the sense that the barrier to entry is quite low. It's quite low. If you want to invest in real estate, if you want to buy lands, especially in Lagos, and there's a limit, there's a minimum of like you need some big money. Let me just put it in there, quote unquote. You need big money to make tangible investments. You can't say you want to buy land in Lagos and you're bigger 100,000 naira. Where do you want to? Maybe it's just one shovel of land that they will give you. It's one shovel of land.
You want to buy land in the bush.
It's one shovel of land that they will give you. But real estate, stock market gives you options, and also it is very liquid. That's one of the beauty about stock market. It's liquid. It is liquid enough in the sense that you can easily liquidate your assets. You can easily sell your shares whenever you want. That have you heard when you've heard of maybe distress sales? Maybe somebody has land and he wants to sell it. He needs the money urgently, but there's no buyer. So let's say the land is worth 10 million naira, but there's no buyer and he needs money immediately. Like, okay, distress sales, let me sell it for 8 million or maybe 5 million. That's not the true value of the money, but because he wants to get the money, wants to liquidate his asset, and it's not that easy. So he kind of beats down the price so that people can. So real estate is not very liquid. is not very liquid, but stock market is very liquid. You can sell your stocks almost immediately and you get some money. So that's one of the beauty with US stock market and why you should invest in it. Now I've talked about choosing the right platform, getting started. So you sign up on this platform, it's easy to use, easy to follow through. For Nigerians, you kind of use your BVN, bank verification number, or your NIN, national identification number. You use your utility bill for proof of address and um your ID card, either voter's card, um, driver's license, or your passport, international passport. So that's that. So the platforms are quite easy to understand and everything. So that's about choosing the right platform and getting started. Now let's talk about researching and picking stocks to buy. How do you know the right company to buy, and how do you know something to avoid? So one of the please can you just give me a minute? I'm coming. My phone is a bit low, so let me just plug it. I'm coming. Okay, I'm back, man.
All right. Welcome back.
Yeah, I'm back. Hope you guys are learning a lot in this session. If you are learning a lot, type what you've learned so far. If I continue, type what you've learned so far. Okay, so why that is going on for of course of time, and I know that some of you would have questions, so let me just move ahead with it. So researching and picking stocks to buy. How do you know the stock to buy and research? So one of the things you should understand, which I always tell people, is that look for where the money is. Look for where the money is going, where the money is. That's how you would know what to invest in. What are people interested in? Which company is of? Now, I don't mean chasing the crowd. I don't mean following trend, but you are not in an isolated world. It's not just all about you. You are not the only one investing in a stock. And it's not about, you don't need to find the next gem or the next hidden treasure. It's not necessary, because the whole idea is that we all want to make profits. So whether you find the next hidden gem or I go for what is really established, the main thing is that I invest my money and I get my good returns. That's all. Nobody cares, because there's no award of except maybe you work as an analyst, so maybe your job is for your company to be finding out, okay, what's the hidden gem company that we should invest in. So if you work as an analyst or a research person ahead, then you can look for the name. But if you just you're interested in getting returns on investment, so whether you go for the next gem or the next big thing, or you go for something that is established, the main thing is that what is your numbers? You made money for your investment, that's all. Nobody cares. So you don't need to, you don't need to start looking for the next gem, next big thing. You're not the only one in it. As a matter of fact, at times, if you are the only one investing, or if there are very few persons in a particular place, it could be a sign that we are in the wrong thing. At times, if you are maybe if you are very few in a particular place, it means you are in the wrong place. Go to where the money is. Go to where the money is. So where is the world going to? Like, what are the industry trends? Where is the market right now? So right now, generally in the world, we are, especially in the technology space, you are hearing about AI. I'm sure many of you here, you've done AI picture. So everybody's like AI, tech, AI, the next big thing. Few years ago, I think 2 years ago or so, it was a metaverse. Everybody wanted to buy metaverse, this. So you need to know, like I said, I'm not saying you should jump on trends. because if you jump on trends, you are likely to lose your money. But go to where the market is. Go to where the market is. Many years ago, BlackBerry was the main thing. BlackBerry was the big thing. Like then, if you had a BlackBerry phone, you're a big boy, you're a big girl. I remember when I was graduating in secondary school, I wanted to buy a Boat 5. Like that was like my birthday, like more if I have Boat 5 like this year, more I don't blow, I'm a big boy. But now today, if you say you have BlackBerry Boat 5, people will be looking at you like, where is it? Did you not wake up from a cave? Because why? The market has moved. People are no more there. So it doesn't mean BlackBerry is a bad phone, but the market has moved. And if we study BlackBerry very well, when Android wave began to soar high, BlackBerry wanted to, will I say, leverage on that. So they're releasing some phone that had Android operating system. I don't know if anybody here there was one, I think Z10, Q10, that you could use Android apps on those, but still it didn't really thrive because the market has already moved. Now it doesn't mean BlackBerry is a bad phone, but the market has moved. So then 10 years ago, if you bought BlackBerry shares, you'd be like, oh more, this is a big share, like big boy. Keep it for 10 years, keep it for 20 years. But if you kept it in now, BlackBerry shares will be almost worthless because why? The market has moved. So you need to know where the market is moving per time. Go where the money is. Now, for the US stock market, the largest or the most prominent sectors to invest in are tech-based companies, because those are the largest companies in the US market, and those are the most dominant. Like I said, for beginner, except if you are an expert, like a very big professional, then you can say, okay, you want to be looking at which sector is the next gen thing that you just buy like this. But starting out, you don't need to start saying you want to look for the next gen thing. At times, you should go with the trusted. So tech companies, also electric vehicles. We've seen the wave of Tesla, how dominant Tesla is, Elon Musk and the likes. Electric vehicles. So mostly if you have, there's also, so okay, I was kind of relate it with tech, but there's also gaming sector, because the gaming world is now becoming huge and big, is now dominant. For those who follow company news, Microsoft is buying this big gaming company, Activision Blizzard. Microsoft is buying it. So gaming is really important. Then there's another sector. Okay, I've talked about tech. Then also energy. Investing in energy companies is, so energy can be either renewable energy or green energy, because in the way the world runs with energy. We can't do without energy. Whether you are buying petrol or you are buying this, energy should be invested in. So Emmanuel, you can just put it to energy instead of green energy. You can just write energy there. So energy. So tech companies, gaming, electric vehicles, energy. So these are sectors that are really dominant, that are really important. Now let me kind of just break it down a bit, so you kind of know, like I said, go where the money is. Go where the money is. Now let's talk about tech companies. Tech is broad. Tech generally is broad. And for the likes of Apple, Microsoft, Amazon, and co, personally, at times I just feel that I don't even know what business these people are into anymore. They are just tech companies. Because if you say, because Microsoft, if you look at it, they've evolved. They are not then they were the PC company, they were manufacturing PC, and now they are even into cloud computing. They are even heavy into cloud computing. Last year, when this AI stuff came out, ChatGPT, OpenAI, Microsoft has already bought it. Google did their own bad. So they are kind of competing. So if you take AI companies to invest in, you see Microsoft there. If you see tech companies, you see them there. Chip companies, you see them there. So tech companies, so these guys are really huge. And you have the big companies there, Apple, Microsoft, Amazon, and the likes. They are huge. So another one, electric vehicle. Tesla is shaping the vehicle market and everything. Green, the world is going into green energy and renewable energy and everything. So electric vehicle is something really huge that you should have a look on. Then gaming also, since when COVID happened, the gaming industry has kind of blossomed and it has gone really, really high. And gaming is really, really huge. And Microsoft is one of the leading companies in that sector. They are leading heavily in gaming. Then energy. Energy is really, really important. Oil and gas companies, renewable energy, just energy generally. Now, one thing I would do well to say is that if you want to invest in these sectors, look at the most dominant players in this industry. Who are the biggest players in this industry? That's where you want to put your money into. That's where you want to put your money into, because in a way they control the entire sector, the entire industry. So that's one of the things you should do to research. So researching and picking stocks to buy is like a topic on its own. It's like a masterclass on its own. So I don't want to would I say use so much technicalities or start talking about some technical like maybe P ratio and all those valuations. It might sound too gibberish and you will feel that all this is just accounting, grammar and everything. But on the surface, understand what are the sectors, because that result will help your decision making. When you understand that, okay, which sector are the most dominant now, that's where you want to put your money into. Now, for those who are in Nigeria, let me use this example. So you to drive home this point of going where the money is and the sector to invest in. 5 years ago or even 10 years ago, if you want to recharge your phone, your airtime, we would use scratch card. I don't know, for those who can still remember MTN scratch card. Then there was only a silver panel, so you had to scratch it to reveal the number.
Yeah.
Then it was a big thing. Later it moved to paper, something that they use pin. You open it, you want to recharge. I want to buy MTN 500. They give you, and it was a big thing. But today, those businesses, they don't thrive anymore. You want to recharge your phone, just on your GT star 737 star 500 hash, boom, you already recharged. Yeah. Back in those days, cyber cafe was a big thing. Then in secondary school, that you want to browse, you go and pay for airtime, 1 hour, 30 minutes. Yeah. You buy and they'll give you a code. And so then if somebody say, I have a big cyber cafe company, invest in it, you can maybe say you want to go put 1 million naira to invest, because it was huge then. That was the market as at then. That was where the money is. But now, today, if you say you want to open a cyber cafe company, people look at you that, is this boy okay? are you in the village? Even in the village, you will not see why, because the market has moved. Everybody have smartphone. Then we didn't really have smartphone. It was just palasa. So there was no way people could easily access internet. Yeah. But now everybody can access internet anywhere. So if you say at this stage now you want to be opening cyber cafe, people just look at you that, is this guy okay? Why? Because there's no patronage. The market has moved. So when I say you should go where the market is, follow where the money is. Like I said, it doesn't mean, I'm not saying you should jump on trends, but observe when the market has moved from one place to another. Understand where the sector is now, what people, where investors are putting their money, where the institutions are putting their money. It will help you to know that, okay, this is where the market is. This is what people want to invest in. This is where people are putting their money in. Now, any big tech company that is not investing in AI, now I'm talking about companies, like any tech company that is not investing in AI, they would easily lose out. Now you see Apple or you see Google that they release these products, you see Microsoft that they release this product. They are trying to evolve. They are trying to evolve. They are trying to stay with the trending times. They are trying to evolve. Look at the battle TikTok is giving Facebook. Yeah. When they came, it looked as if this was just joke, but they took it by storm. Mark Zuckerberg had to respond by releasing Reels. If you didn't respond, you would lose a huge market share. Why? Because people's attention is already in something, is already in something else. So you need to understand where the money is, which sectors are the prominent ones. It will help you to understand where to invest your money in. Now, the next point, monitoring your investment and knowing when to sell. Now, this can be a bit tricky, especially if you are not, if you've not yet entered the market yet. So I'm going to be, let's say, diplomatic in my answer. But one thing I would say is monitor your investment. What I would say is exactly similar to what I said in the last point. Know when the market is moving, know what's on, what I don't use what is in vogue, but know where the money is per time. Know where the money is per time. Now, 10 years ago, if you bought BlackBerry stock, if you didn't monitor it and you just said, because in a way, yes, we always say invest for long term, uh, invest for 20 years. There are people that would even go far and say, just buy and forget, buy and forget. It can be tricky and it can be deceptive. Because 10 years ago, BlackBerry was one of the biggest phone brand company. Nokia were like the biggest. Then Android had not even grown this far. Then iPhone was not even grown this far. So 10 years ago, 15 years ago, if someone say, okay, buy BlackBerry shares, it made more sense. And at that point, you might feel that there's nothing, these people, they cannot do any wrong. So you feel that, okay, let me buy BlackBerry shares, just keep it for 10 years, let me just forget it. But 10 years later, you see the market has already evolved. And if you now look at, you just bought it 10 years later and just come and check, you'll be like, what happened? This stock went down. But you know that the market has already evolved. Let me use real estate as another example. You buy land in Lagos. You just say, I've already bought this land, 10 million naira. I'm just going to keep it here. 20 years later, my money will have reached 100 million. Let me just go. You just leave it there, you forget, you don't monitor it. 20 years later, you come out to that place, it should be like a city, you don't even know where your land is.
Yeah.
So you need to monitor your investment. You invest in something, monitor, monitor the investment. How's the investment going? Do I need to top up? Do I need to increase my shares in the company? Do I need to buy more shares? Do I need to sell some? What do I? You need to know what now. Monitoring your investment doesn't mean every day you should be going there to tell, has it gone up, has it gone down? Because why? Stock prices move up and down, move up and down. So if you are checking there, going there to check every day, you will give yourself hypertension, and it would also you would have you get the wrong concept, because today like, okay, it is up, tomorrow it is down. You'll be like, that's not how it works. But put your ears to the ground and know what is happening. When a major shift is happening, you are aware. Any major shift is happening, how is this shift affecting my stocks or affecting the stocks of a company that I have? Now that you bought 10,000, okay, let me use dollars. You bought $20 worth of stock in a company. That doesn't mean that is the only shares that you buy. There's something called compounding. I know most persons know about compound interest. There's something called compounding. That you deposit 10,000 naira in your bank account doesn't mean that's the only money that you would have there.
Yeah.
You can always deposit with time. So I'm not going to talk about that in personal finance. So you cannot detach investment from personal finance. They go hand in hand. So you bought 20. So I was going to discuss with someone today during a conference I had. Now let's say you want to buy. If I say, okay, buy maybe $1,000 worth of a particular stock, it might look too big. Like, and that $1,000 is big. But let's say you invest $100 every month for the next 1 year. You are doing that consistently. At the end of 1 year, you already have 1,200. At the end of 1 year, you already have 1,200. Now, if we do this for 3 years to come, at the end of the day, you see that you already have 10,000 units and $10,000 in that particular stock. And as the company keeps on growing, the value keeps on growing, it kind of compounds and compounds. That's how People build wealth. So you don't just start one that you just buy this stock and just go and sleep that tomorrow it will turn to you turn to a millionaire. It doesn't work that way. It doesn't work that way. So you need to monitor your investment. When you bought shares of that company, know what is happening. Be abreast of what is happening in the world. Now I don't mean you should be an accountant per se, but when there's a major thing happening, you should know what is happening. Inflation is happening. How does inflation affect the stock market? You should know. You should ask questions. You should read about it. There's inflation. How does it affect the stock market? They're raising interest rates. How does it affect the stock market? You don't need to be an economist. I didn't have a finance background in terms of as my education. I studied geophysics. I studied geophysics, but I'm knowledgeable about finance because I learned it. So I'm not saying so. Obviously, if you have maybe you studied banking and finance or you studied economics or accounting, this can have it can have added benefits for you, but it's not compulsory. I've seen people. This one is not even. I heard two persons. There's one guy. He studied economics in school, economics in the university. When I thought about stock market, it was as they said, what I even thought, even he that studied economics did not know up to what I said, and I didn't study. The last training I had recently, one of the ladies there said that what she learned I that my session more like practicalized the theory that she learned in school in economics. I didn't study economics. So you don't need to be an economist, you don't need to study this. Obviously, if you study them, there is added benefit and everything, but that's not a limiting factor. But you need to have understand, okay, interest rates, inflation is high. How does it affect the stock market? They are raising interest rates. How does it affect the stock market? So you need to know. So with that, it helps you monitor your investments. It helps you to know that, okay, stocks are down. Let me add more. Let me buy more units of this stock. This is a buying opportunity. Stocks are down is a buying opportunity because the stocks will still go up. It's a buying opportunity. Let me get into it. Let me get into it. Now, investment and risk management. Now, I'm going to use say more like a two-in-one something. Investment and risk management, then avoiding common investment mistakes. I'm going to use the two together. One of the things I would say is don't invest with your emergency fund. Now people do this a lot. They don't invest with your house rent, with your school fees money. That's not investment. You are doing kalo. That's not investment. You are trying to do will I say MMM? You are trying to do jazz. Let me use that way. You have your school fees money, you go and put it, say, let me just buy this stock that is betting, that is gambling.
Yeah.
You don't invest with your school fees money, you don't invest with your house rent. Because why? You can't, you are not in charge of the market. You don't dictate the market. You cannot determine what would happen. You don't dictate the market. You don't play by chance. There's a popular saying in stock in investing that you don't you don't time the market. Spend time in the market. Don't time the market. Don't try to time that. Okay, by this so day it will have increased. Spend time in the market, because when you spend time in the market, you have you give your investment room to. There's something I usually say that because you're investing in companies. Now if it takes time for companies to grow, why don't you want to give your investment time to grow? The companies that you are investing in, it takes them time for them to grow, for them to mature, for them to become way more profitable. Why not give your investment time to grow? Don't invest with your emergency funds. Don't invest with money that is meant for your daily expenses, like your regular expenses. Something that you are supposed to use to feed, you are putting it. No. What you invest is out of your savings, out of the money that you saved, you take out of it to invest in it. Not that the money meant for your house and you want to go and invest in it, or the money meant for your school fees, you want to go and invest in it, or the money meant for one project, you want to go and invest in it. No, it doesn't work that way. Doesn't work that way. Now let's go to the final subheading: personal finance habits to building wealth. Personal finance habits to building wealth. The first thing is setting financial goals. Setting financial goals, and like I said at the beginning when I give example of me and Emmanuel, that I invest 5,000 and Emmanuel invest 500,000. You guys said that yes, the amount he invested, he invested more. And the only way you can invest more is if you have more money. So one of the things I would say setting financial goals is that make more money. When you make more money, it gives you more options. It gives you more opportunities to invest. Best way to invest is to have more money. So take your personal finance in intact, setting financial goals. How many streams of income do you want to make? Do you want to have? Where else can you make money from? Because the more money that you make, the more opportunities that you have to invest in the stock market. Another thing is budgeting and saving. It's really, really important. It's really, really important. Have a budget, have a plan. Separate your investment funds from your emergency funds. Don't invest with your personal expenses money. Save regularly. Save regularly. It's from the money that you saved. That's what you're investing. That's what you invest in. Most of the people that, if you look at it, most of the people that lost money through one investment scheme or the other, whether MMM or this something, if you look at it, they always will. Why are they complaining? It's not really because of the money that they've lost, because that's another thing. For every good investor, they've lost money before. You will not see Dangote crying that he lost money, but he has lost money. In short, if they tell you the amount Dangote has lost, you're you said you go choke, you like and he's still breathing. The reason why he's still breathing is because the money that he lost in whatever something, it's not something that, how will I put it? It's not. So most of the people that cry when they maybe lose money in one something is because it's money meant for something important that they are putting there.
Yeah.
Maybe it's their school fees money or the school fees money of their children, or money meant for hospital bill, or money meant for one thing or the other that are
Yeah.
supposed to use or keep. They put it inside. They put everything inside there to expect magic. So when it's in folds, they have nothing to fall to. There's some people that you hear that I invested all my life savings. You don't invest all your life savings, all your entire life savings. You put it to one investment. That's not that way, because there are risks attached. So you
Yeah.
need to spread your risk. So even if you say it's real estate that you can't put all your entire money in just real estate. You need to diversify, because one, liquidity. You need to focus about how liquid is this investment. You put all your life savings in a property. Now you want to sell it. You are looking for buyer. Buyer is not looking for you. You have issues with it. You now start doing distress sales. Diversify your income. Have some money in a particular investment. Okay, let's say you buy lands or something. You buy now. You might not be able to do everything at once, and it's not possible for you to do everything at once. That's why I say give yourself time to grow. Do something part time. Start with something, then you grow up. Start with something, then you scale up. It's really, really important. It's really important. Now, the final one is what I've said repeatedly: growing your investment gradually. Grow your investment gradually. That you start with 10,000 now today doesn't mean that is the only money that you're going to invest. There's something called dollar cost averaging. Continue to invest. When stock prices are up, continue to invest. When stock prices are down, continue. Over a long period of time, it evens out and it gives you more leverage. I hope you've learned something. I hope you've learned something. So that's
Wow.
the end of uh
Wow.
this session. So I'm sure one of you would have one or two questions. So we can start taking some questions. I hope you've learned
This
something from
so
today's class.
much value. Thank you so much. I've learned a lot. I hope you guys have learned a lot as well. Thank you so much. Thank you so much. Yeah. So very quickly, if you have any questions regarding anything Nathaniel has said so far, investment, money, the market, you can start sending in your questions now, and we're going to take questions one after the other. So please start sending in your questions. In the meantime, I think those people that sent questions earlier, those questions have been answered. Um, Abib said, will there be a recording? Yes, the recording is going to be on my channel here. You can always check the channel. Then, can you list out profitable stock we can buy? I think you've mentioned the industries to invest in, but do you want to mention specific companies or
Okay,
you
so
leave?
this is what I would say. It's not for a let's say public webinar like this. It's not
Yeah,
advisable for me to mention specific. If it's like maybe my individual training, because I know that yes, I can guide you and everything, but I can't vouch for you. I don't know the Joshua So like what I did was, like I said, I've listed out the sectors on the industries, and I said look out for the top players in these industries. Look out for the dominant companies there. So from there you get your clue. You get your clue. What are the top tech companies? What are the top gaming companies? What are the top electric vehicle companies, energy companies? So do your research and everything. You get the individual stocks.
yeah. So just look at tech companies, electric vehicles company, gaming companies in the gaming
Now these are
industry,
not the only ones. Also, these are just some few
the top ones.
for I could mention. There are still some others, but I think these are the top ones that you can start with.
Okay, I joined late. I want to know the platform one can use to invest here in Nigeria.
Okay, so the platforms, Manuel can put them up on the screen. I told you
Yeah,
about Bamboo, Chaka, and
bamboo
Throw.
and stuff.
So
Yeah,
you can use any of the three. You can use any of the, although my favorite is Bamboo, but you can use any of the three. You get be able to invest in these companies.
yeah. So and the good thing is these apps are very easy to use. You can just install
Yes.
them, sign up, the normal sign up process, and you're able to see all the companies right there.
I
You
think
see the
man, I think you I don't know if it is you or
yeah.
one
I
other
did a
YouTuber. I think
video
yes, you've
on
done or you view on
so
Bamboo. I
yeah.
think
The
I
process
saw
is
it in
very
one of the
easy.
videos. Yeah.
Just know the company you want to invest in. As a matter of fact, all of these companies have tutorials to guide you if you want specific
Yes.
guide on how to buy. They have tutorials on that. And yeah, so bamboo, chaka, and trove. Let's see. How can we know when the market is low?
Okay. How to know when the market is low? Um. Okay. So there's something called bear market and there's something called bull market, and also there's macroeconomics and there's microeconomics. Now micro microeconomics is it has to do with individual companies, while macro economy has to do with the country, the economy, inflation, interest rates, while micro has to do with individual companies, these individual companies, what's happening with them. And then, so one of the things to know when market is low. So there are different things to look at. For bull market is when the market is pumping, everything is going up, economy is good, interest rates are low, and like people are buying into it. While the bear market is when market is down, and so there are cycles. There are cycles in the market too. Just like the weather cycle, you have rainy season, you have dry season, autumn, winter, and everything. So it's a cycle that goes on and on. So that you are in rainy season doesn't mean there will be no dry season, or you are in dry season doesn't mean there will be no rainy season. So what you need to know is that know how to profit from each season that comes. Know how to profit from each season now. So one of the things that you would able to know when the market is low is inflation and interest rates. When inflation is high, stock prices usually go low. So it's more like an inversely proportional relationship. When inflation is high, stock prices are low. Stock prices are low, and when they try to, because one of the ways to control inflation is by raising interest rates.
Yeah.
And once those things happens, there'll be less demand on stocks. People would want to pull out their money, there'll be less demand on stocks. So that's all of the reasons where you obviously generally without these external factors, all stock prices go up and down generally and everything. But on a long scale, like now, for like the past last year, there's a period throughout last year and I think 2021 and mostly last year, the stock market was really, really down because of inflation, raging inflation. Inflation was like really, really crazy. They were trying to raise interest rates. So it affected the stock market. Stock market went down. But this year so far, this inflation has been going down, but there's still some pockets of inflation. So that's how that's not the only factor though. That's not the only factor, but that's one of the, let's say, prominent ones you kind of look out for. So when a particular stock, when stocks are down, you need to find out that, okay, what's happening on the larger scale. Is it just a normal? Because at times it could be down because maybe they released poor financial results and everything, or maybe they had change in management. That so maybe there's maybe one particular top executive resigned or they sack him, and and that person would have huge influence in the company. Just so many reasons, so many reasons. So, but those are the few I would talk about.
All right. Then let's go to the next question. Let me see. Odutola said, all these apps, are they registered companies in Nigeria?
Okay,
Yeah, they
yes, so they
have.
are registered. Yeah, they are
All right.
registered and verified. They are registered and verified. They even like for Bamboo, their headquarters is in. They are registered in US and also in Nigeria. So these platforms, they have a brokerage partner that is called Drive Wealth. They have a brokerage partner. So Drive Wealth is a brokerage firm in US. So these companies, Bamboo, Chaka, and the like, they partner with them. So it's with that. So Bamboo kind of act like a middleman. So individually, we cannot like have direct access to the US stock market. So they act like a middleman, like a bridge connecting the users and the markets. So just like the way Uber works, they connect the driver with the customer. So giving a platform whereby, okay, the rider, the customer can, the person in need of a ride can meet a driver, or the driver can offer service. So it's just more like so they are fully registered in Nigeria. So yeah, you can use them fully registered. You have no issues.
All right. Then Felix Zoku, aside bamboo, you mentioned bamboo as bamboo is available in Ghana. Is there any other option in Ghana?
I don't think so for now. To the best of my
So
knowledge, for now, I don't think so. I don't think Trovis are available for Ghanaians, and I doubt Chaka is available. So it's only bamboo that I know of, and so you can use
if
that.
if you're outside Nigeria, you can just do your research, just find out. But
Yes, there are
bamboo
another like if you're in UK, there are even more options in UK.
options, yeah.
There's the 212 and some other I've forgotten their names, but there are other companies but for Ghana, just use bamboo. That's the one I know of.
Timothy said, what of Binance?
Okay, Binance is not for stocks. So Binance is a crypto trading, is a cryptocurrency platform. It's mostly for crypto, not for stocks, not for stock markets. You cannot buy stock on Binance platform. If you look at about Binance, they will tell that they're a cryptocurrency platform, company. So it has nothing to do with stock markets. So you cannot.
So Oluwatosin said, how can an individual assess a company's financial health and performance before investing in stock?
So one of the things you look out for in financial statements, one of the things you look out for is revenue. What's the revenue process like? Like the revenue growth. Are they making money on a regular basis? What's their profit like? What's their balance sheet like? How much cash do you have in the bank? how much cash do I have in the bank? Because that's one of the things you, because if a company is losing, if their revenue is going down, they're losing like customers or losing revenue, it affects their like for companies like Tesla now, you look at one of the things you look out for is car deliveries. How many deliveries were they able to make in this quarter in this new market? Are they selling more cars, or are they selling lesser cars? Then there's one other factor you need to check, earnings per share, price to earnings ratio, PE ratio. So those ones are a bit technical in nature, but yeah, um, those are the things you should look out for. Those are the things you should look out for. PE ratio. So you can read them up. PE ratio, earnings per share, and everything. You have a clue on what's going on with the company financially.
Then Paul said, what are the two factors? Are there two factors of a favorable stock?
So is it like what makes a good stock favorable? Now it's relative. What makes a stock favorable? It's relative. So it depends on what you are looking for. So there are different sectors and everything. So it depends on what you are looking for and how long you want to invest in that company.
Yeah.
How long? So there's this investor, you can read about her. She's called Cathy Wood. Cathy Wood. So she has an hedge fund, like an investment company. They invest in tech companies. So at 2021 or so, they understand that her investment went down, like the companies that she bought were down. Well, she still has those companies till now. She's still investing in them. So what is favorable to you in a particular stock can be less favorable to me in a particular stock.
Yeah.
So there is valid. So the stock market is, most times it's not black and white. It's not black or white. At times it's gray. Depends on which angle you are looking at, what
Yeah.
concept you are looking at. So it's not like black and white that it is not this, is this. No, it doesn't work that way.
All right. So RJ Sparkle said, is the S&P 500 still profitable?
Yes, so okay, I have a book which I'll talk about at the end of this session. It's called The Stock Market Millionaire. So that book, it's where I wrote everything about the stock market, everything I know. It's a very beautiful book to read. You don't know anything about the stock market and you want to get that book, yeah, good to go. So the S&P 500 is to some most important um is the most important index to use to track the stock market. It's really profitable because that's where you have the 500 largest companies in the stock market. So S&P 500. So the S&P is more like the full name is Standard and Poor's, so it's more like an index. So 500, you have the 500 largest companies there. So that's where they have likes of Apple, Google, Amazon, and so it's really profitable because that's where you have the largest 500 of the largest companies. So yeah, it's really profitable to invest in.
All right. Thank you so much. I think for now we've exhausted the questions, but if you have questions, you can still send them in. So, Nathaniel, can you tell us how, for those who want to connect and learn from you more after this class, how can we connect with you? You've mentioned your book several times. Tell us more about the book, and if you have programs, courses that people can take part of.
Okay, okay. So one of to learn more from me and to connect with me, I would say you should follow me on Facebook. Like I said at the beginning of the class, so that's where I'm mostly active on, Nathaniel Disu. So just search me out on Facebook. You would see me there. You follow me, read my content and everything. So that's on that. Then for my books, Stock Market Millionaire, it's a it's it's a book that that's like one of my major training sessions. So if you want to learn anything about stock market, just get the book. You are going to learn everything about it. So I'm going to put a link. That I'm going to send it to Emmanuel to post, so
Yeah.
you can. It's available on Seller, so you can just go there, read about the book, read about reviews or testimonials of those who have purchased the book you are going to So I'm going to let the book do the talking, but that's where you learn everything about the stock market more in full details, more than what I've talked about there. I talked about the more industries to look out for, why stock prices go up, why stock prices go down. I talked about them. I talked about how the market behaves and everything about the stock market. So if you want to learn from me, maybe you'll get access to this. Let's say this is my training or my course. Let's just put it that way. So if you can get access to that book, you are good to go. You are good to go. So that's a good place to start from. That's a good place to start from. So just go to seller.co.co// stock market millionaire. So once you just go there, you get access to the book. So the book sells for 10,000 naira. So you would get access to it, read it up, and you can easily get started with the stock market from that book.
Yeah, so you can go to seller.co right now, seller.co/stock market millionaire. If you are really serious about investing, I recommend you get this book. He's somebody who knows this stuff and can teach you how to, make profit for yourself. So seller.co stock market millionaire. And also don't forget to follow him on Facebook, Nathaniel Disu on Facebook, the same name on Instagram and Twitter as well, but Facebook
Yeah.
is the main platform. So we have another question here. Can you explain about the recent Elon Musk innovation, AI on stock? How does one get involved? Okay, I'm not sure if I understand this, but
Yeah.
can you explain the recent Elon Musk innovation about AI? How does one get involved and not be duped?
The question is a bit confusing. How does one explain about Elon Musk's innovation about? I don't really get the question. Elon Musk's innovation. Elon Musk did not innovate AI.
So, Chukwu,
He
if you can
didn't.
rephrase your question again, it would be
He
very
didn't
helpful.
innovate AI.
Yeah. So, I hope you guys have learned a lot from this class. But if you still have any question, you can still send me your questions. But right now, one of the best things you can do is to go over to Seller and get Nathaniel's book, The Stock Market Millionaire. You will thank yourself for it. So,
Yeah.
yeah, I think we've exhausted all of the questions. Thank you so much
Yeah.
for coming, and it was nice learning from you. And you have any final words for close?
So my final word is that keep on investing and yeah, be a lifelong learner. Keep on learning beyond what you cannot learn everything in one day. So even if we spend 6 hours talking about there's something that you cannot really learn until you get involved in it. So get involved in it, get started with it, and I'm sure you are going to learn a whole lot. You're going to learn and you're going to love it. The stock market is a beautiful
Yeah, you are
investment.
going to love it, definitely. So you can start no matter how much you learn. If you don't start, if you don't try it out, as a matter of fact, most of the things that will make you the most profit, you will not learn them from any teacher or any coach. You actually learn them by seeing your money go up, go down, go up, go down. Then you'll be able to link things together and all of that. So, thanks so much, guys, for coming. Thank you, Nathaniel, for your time. It was nice having you
Thank
here.
you. Thank you,
And
Manu.
I'll see you on the other side. All right, guys. I hope you guys learned something. If you're just coming to this channel for the first time, you're welcome. My name is Manuel, and on this channel, I create videos that will help you make money online. So if you're not yet subscribed to the channel, go ahead and smash the subscribe button before you leave this live stream. And also, you can drop a like, hit the thumbs up button if you enjoyed this class, if you learned something from this class. Share it to somebody, share it to your friends on social media, share it to Facebook, Twitter, WhatsApp, to help somebody, experience what you've learned this evening. Yeah, and that's basically it for this session. I'll see you guys in the next session.